Hi, welcome to Mark Austin Trading Tips. Today we're going to be looking at secondary confirmation signals when we are entering a trade setup. Now, before you even consider entering a trade, you need to have a plan in place. And by way of that, I mean you need to have done your market research and you need to have done your analysis of where the markets are heading over the short term and also looking at the bigger picture as well. On the FTSE, you need to be looking at the monthly charts all the way down to the 5-minute charts on each occasion that you are looking to take a trade out. Now I live in Thailand, so I've got a bit of a time advantage. I have quite a few hours before the markets open in the UK to really digest what's happened on the American session and also the Asian session as well. I'm using a combination of gap analysis, Elliott wave analysis, and also price action to establish the short-term direction for the FTSE. And each day my subscribers get a report at 7:50 detailing the most likely direction for the FTSE in the short term and also highlighting the best trading opportunities for the day and also medium-term trade opportunities as well. I'm not going to be looking at technical analysis today, but I will just flag two areas I was looking last Thursday, which was the 26th of May. The market actually hit 5910 on there was two occasions that it hit 5910, and we can see there was two very clear selling rejection bars here, and each bar comprised of almost around 30 points. So in a few moments the FTSE lost 30 points from hitting this key level at 5910. So when I'm seeing this sort of action, that immediately becomes very important to me. So going to the Friday session, certainly 5910 was very key, and if the market had held 5910, I was looking at buying opportunities, and a penetration through 5910 would have opened the doors to more selling. Okay, so once you've got your plan of action for the day and the trading opportunities that you're looking out for, the second stage is to be looking for secondary confirmation signals. So these are confirmation to your actual market analysis. Your market analysis is your primary signal. Now these come in after 8 AM. If you're trading at 8 AM, you want to be using different techniques and systems, but certainly after 8 AM, you want to be using these confirmation signals. Now all the professional traders use these, and it avoids trading against the flow of the market. So you always want to be trading and opening trades in the actual flow of the price action. We're using the 5-minute chart here. You can also use the 10-minute chart, but we're looking at very short-term time frames for these signals. So in this example, obviously 5910 was a key area for the day. We can see the market fell down to around 5916 early on. It was a failed retest at 5910, and it bounced after that. So that was bullish. So we're looking for buy opportunities for the day at this stage, but we wouldn't be entering just here. We would wait until we see a signal in the direction of to complement our analysis. So let's look at some examples now. I mean, you could wait until you see 3 higher highs. So we can see here we made a high here, we made another high, and we made a high here. So once you saw that, you could have gone long on a break here with your stop just below here. Another secondary signal, you could be using positive and outside bars. Positive outside bars and negative outside bars. We touched on these briefly for trading tip number 1. So we've got a clear example here. We've got a red bar here. The next bar forms, we make a high high. We also make a lower low, but we close higher for that particular bar. So that's a positive outside bar, and it is a buy signal. So we would go along on the break here, and we would put our stop below here. Now these are very short-term day trading opportunities, but you would also want to be using these secondary confirmation signals for longer-term trade setups as well. So in this example, you could have gone long on this positive outside bar, but you probably would have put your stop below, say, 5900 if you were looking for a longer-term trade setup for over a few days or a few weeks. Other signals you can use, well, you can use indicators as well. I'm not a massive fan of them, but they do have their use. We've got the MACD histogram down here. We've also got the RSI. The MACD histogram can be particularly useful. You can wait for that to turn up. So in this example, we're obviously looking for buys, so you'd wait until the MAC turned up around here. Got a green tick here. It's also in line with a green bullish candlestick here. So that's a buy signal, and you would go long on a break here, and you would probably put your stops below the low of the day as well. As I said, these are just a few examples. It's all about finding a signal which suits your personality and lifestyle. But certainly these are a must in trading. They avoid a lot of losses, and they really do help your the profitability. So you want to have your primary signals as your overall analysis, and then you want to be having your secondary signals as a short-term system or a short-term entry mechanism to confirm your overall analysis. One thing I will point out as well is, though, you need to be aware of short-term support and resistance as well. Just make sure when you do enter a trade that it's not very close to a key area of support and resistance. So I hope you found that useful, and I will be back shortly with another trading tip. Thank you.